Very good afternoon to all the participants and also our esteemed speakers. Very good afternoon and a warm welcome to all the participants and the esteemed speakers. Good afternoon, Mr. Manish.
Nice to see you, sir. Good afternoon.
And yeah, good afternoon. And I think our Jyoti ma'am is also there. A warm welcome, ma'am.
Good afternoon. Good afternoon.
Good afternoon. Good afternoon. Yeah, we'll get started in another couple of minutes. I think director is also there. So, Swati ma'am, if you could just do the honors to welcome director sir, and also we need to welcome the gathering also. Yeah, please get started.
Good afternoon, friends. My name is Swati Gupta. I am a faculty at the State Bank Institute of Leadership in Kolkata. You'll have to pardon my voice, not behaving, playing pranks. So do excuse that. I would like to now, we were going to start this virtual panel discussion on MSME challenges during pandemic times and its connectedness to banking fortunes. It gives me great pleasure to invite our director, GM and director of SBIL, Mr. Madhukar Anand, to give the welcome address and to formally open the program. Mr. Anand, over to you.
Yeah. So, good afternoon, all of you. I hope everyone can see me, is able to see me.
Yes, and here also, sir.
Okay. So, distinguished panelists for today's virtual panel discussion, Mr. Manish Sabharwal, Chairman and Co-founder Team Lease Services Limited, Ms. Jyoti Vij, Deputy Secretary General FICCI, Confederation of MSMEs, a special invite to the cohort of executive participants of Indian Bank, who are presently undergoing leadership development programs at SBIL, fraternity of bankers and alumni of SBIL, my faculty and staff colleagues of SBIL Kolkata, and all the registered participants, and those who could find time to tune in today. A warm welcome to all of you. On my own behalf, on behalf of SBI and the State Bank Institute of Leadership, I take immense pleasure in welcoming you all to this virtual panel discussion on MSME challenges during pandemic times and its connectedness to banking fortunes. Let me take a couple of minutes to explain the training architecture of State Bank of India for the sake of the uninitiated to the system. Training at State Bank has always been proactive, planned, and continuous. It has been a century-old concept and an integral part of organizational development. The vast training system of SBI consists of 6 APEX training institutions, ATIs, and 51 State Bank Institutes of Learning and Development, SBILDs, geographically covering the length and breadth of the country. The entire training system is overseen and controlled by the Strategic Training Unit at Corporate Center, Mumbai. The 6 ATIs provide training in their respective areas of specialization. State Bank Institute of Leadership, Kolkata, specializes in areas of leadership, management, and organizational behavior, and organization development. State Bank Institute of Consumer Banking, SBICB, Hyderabad provides training on retail banking with focus on marketing aspects and customer service. State Bank Institute of Credit and Risk Management, SBI ICRM, Gurugram is the Center for Training on Credit, International Banking, Risk and Compliance. State Bank Institute of Rural Banking, SBI RB Hyderabad takes care of training on rural banking and financial inclusion. State Bank Institute of Innovation and Technology, Hyderabad provides technology and digital training, specializing in IT, innovation and e-learning. State Bank Institute of Human Resource Development, SBI HRD, Indore takes care of the new entrants to the bank, probationary officers and training officers, by onboarding them through induction and orientation programs. SBI thus offers the largest learning and development infrastructure in the BFSI space in India. But not only bankers of SBI, but also other banks. We are equipped to cater to the need of all banking domains, including executive education areas, by conducting business analytics-driven relevant training programs. SBIL requires special mention in this regard. With a vision of grooming future leaders in the BFSI sector in India, SBIL focuses its energy on the theme of leadership. Specific programs offered by SBIL are customized from time to time as per the target group's training needs. No other industry has perhaps been as affected as MSMEs due to the pandemic. Today's topic would present an opportunity for enriching discussions on the present scenario and particularly the bank's role in the scheme of things. During FY22, COVID 2.0 has been less impactful than COVID 1.0, and though the stress in the system is far from over, there are vital signs of a revival being posted. The vaccination drive would enable the economy to sustain and handle the pandemic better, and coupled with the various policy interventions of our government to provide handholding and support to MSMEs, the picture is looking brighter each day. Even during the pandemic at its prime, MSMEs in particular have been reinventing and generating employment for both youth and women. This sector generates employment for nearly 7 crore people and has 16% contribution to the Indian GDP. Owing to the importance of MSMEs to our country and their active role in contributing to the production process, employment and innovation, it is of paramount importance to focus on handholding of the MSME and providing them capacity building opportunities. But by far the greatest significant factor for MSMEs would be their ability to adapt digitally. The investment to sustain in the digital environment where the consumers would gradually migrate to would prove to be the game changer. The opening of digital avenues would present ample opportunities for SMEs to introduce new products, differentiate themselves from a competition and grow their digital presence. SBI with our MSME portfolio of approximately rupees 2.40 lakh crores and 17 lakh accounts has been trying to contribute to their development. The banking sector as a whole needs to continue to be the pillar of support to the MSME. Restructuring by the banks would prove to be another aid to their path of recovery. Though the impact of restructuring always proves to be significant and requires proper planning, effective risk management policies and precautionary principles would have to be strictly adhered to for the restructuring process to succeed. It will not only provide scope to the banks to increase our lending portfolio, but also to improve our asset quality significantly. Certainly, the prospect and growth of this sector will help leverage the banking fortunes. I welcome you all once again to this virtual conference panel discussions, and I'm sure you will have wonderful takeaways to work on. Wishing you all the best in the days to come. Stay connected while being physically distant. Thank you.
Thank you. Thank you, sir.
Thank you, Mr. Anand.
Thank you.
It gives me now great pleasure and honor to introduce the speakers and the moderator of the program today. I will start with Madam Jyoti Vij. She is Deputy Secretary General FICCI and Secretary FICCI Confederation of MSMEs. Ma'am is a business economist by training with over 2 decades of experience with industry association. Her main areas of specialization are financial sector, corporate laws, corporate governance, and economic affairs. She has done several joint projects with World Bank, European Commission, IMF, and other UN organizations. She has also been on some important committees of RBI, Ministry of Finance, and Ministry of Corporate Affairs. She was part of the Rules Committee of Companies Act 2013, including that on CSR provision as FICCI representative. With a strong industry and government network, she has been instrumental in influencing several policy reforms. Welcome, ma'am. And now I would like to introduce Mr. Manish Mahindra Sabharwal. Manish sir is the chairman and co-founder of Team Lease, a vocational training firm implementing a university and national PPP apprenticeship program. Prior to co-founding the company, he had co-founded India Life, a payroll and pension services company in 1996 that was acquired by Hewitt Associates in 2002. Consequently, he was Chief Executive Officer of Hewitt Outsourcing Asia, based in Singapore. Mr. Sabharwal is a member of the National Skill Mission, Central Advisory Board of Education, and has served on various policy committees for education, employment, and employability. He served as an independent director on the board of the Reserve Bank of India. He is a member of advisory board of the Comptroller and Auditor General and a governing body member of National Council of Applied Economic Research. He is also managing trustee of the New India Foundation that offers fellowships for writing books about post-1947 India and is a columnist for Indian Express. He got his MBA from the Wharton School and is an alumnus of Sri Ram College, Delhi and New College, Ajmer. Now it gives me an honor to introduce our moderator, Dr. N. Krishna Kumar. Dr. Krishna Kumar is a bank executive turned academic turned leadership trainer. Dr. Kumar brings with him 3 decades of experience spanning banking, consulting, research, training, and academics. As a career banker, he has more than 15 years of progressive banking experience with varied profiles and has worked with nationalized private sector and foreign banks, namely Citibank, Corporation Bank, Union Bank of India, Dhanlaxmi Bank, and now State Bank of India. He is exposed to both general and specialized streams of banking and has headed the risk and treasury functions in banks. As an academic, he has held academic leadership positions for more than 10 years as director and dean in 3 different universities and has served as chairman and member of board of studies and academic councils. He has won several awards, commendations from various industry bodies and professional associations, including IBA. I welcome all the 3 of you, and Dean sir, I now hand it over to you to take the proceedings forward.
Thank you, Swati ma'am, and thanks to our director sir for the wonderful introduction to welcome all the gathering. So thanks to our esteemed panelists, Mr. Manish and Jyoti ma'am, for having joined this for this particular virtual panel discussion, which, as you all know, that is on a very, very important theme: Msme Challenges during pandemic times and its connectedness to banking fortunes. So, as we all know, that the impact of the pandemic was large scale. And we also by now know that the biggest impact was actually faced, biggest blows rather, economic blows were faced by the MSME segment, especially during the first lockdown, what had all happened, we all know about it. But by the time the second wave came in, we were slightly better prepared as the kind of the prognosis we have as of now. And the challenges are still continuing. We all know that the MSME challenges and the recovery banks that they are all making from that are enough, themes to debate upon, especially to the banker community, because we serve majorly the bankers, and especially we run a lot of programs for them, especially the leadership in banks. And it's also no brainer to also know that the banks' fortunes are invariably connected in the MSME sector. It is not the higher rated corporates who give them better interest rates or better, clientele for the banks. It is the common small, micro and medium and small enterprises who are the major clientele base of banks. And it is in this particular, predicament that we thought that there is no better topic than this to talk, especially the ones which are at a time when we are trying to recoup and revive the economy from where we left off. And the role of bankers is huge here, and no better person than people like Ms. Manish and Ma'am is there, who's representing the Confederation of MSMEs. So, pleasure is ours to engage with both of you, and also to pose a lot of questions and understand how the whole thing is going about, and that is the primacy for this particular virtual panel discussion, if I may say so. So I'll take my first discussion question to Ms. Manish. Uh, in fact, Ms. Manish doesn't require much introduction. We had already involved him earlier in one of our programs sometime last year, immediately when the pandemic struck. Maybe good some 2-3 months into it sometime last year. And we all know, Mr. Manish, that the government and the Reserve Bank of India and all were making so much effort ever since the pandemic struck, and from predicting that the ill effects of it will fall majorly on the MSME segment. And it's also in their effort to put the economy rails back on track that there has been so much of initiative, be it the credit guarantee schemes or the moratorium benefits that got applied, and so on and so forth. And then budget came, whole lot of programs there as well, be it Atmanirbhar or PLI schemes and so on and so forth. So now going to the economic fundamentals, right now we see some good green shoots are visible, but we really don't know whether many of these things are can be sustained. And as a director was pointing out, the technology behemoth is still sort of dangling its this, and how MSMEs will be able to sort of counter it or be with it, and the kind of formalization and waves that is consolidation waves that are happening, how MSMEs are going to sustain going forward, being such a very important participant in the scheme of things for India's growth trajectory. How do you see this entire scenario playing out, and what kind of a clawback MSMEs can make at this hour?
Thank you, sir. I think, MSMEs are a very important part of any economy in the world. I guess the question really is are they special, or do they deserve special treatment? I mean, COVID doesn't really distinguish between, people or races or religions, and nor does it sort of distinguish between employers based on their size. So the question which we often have to ask ourselves is, are India's challenges in COVID new challenges, or are they pre-existing conditions? There were many comorbidities of the Indian economy which got amplified by COVID. I don't think they were created by COVID, right? We were going into the pandemic, we have a credit to GDP ratio of 50%. I don't think China's 300 credit to GDP ratio percent is the right number, but I think 50% is surely the wrong number. We have a gap of, let's say our ideal credit to GDP ratio should have been 100%. So we have roughly 140 lakh crores in bank deposits, 110 lakh crores in bank loans, of which unfortunately MSME credit has been stuck between 10 and 15 or 10 and 20. Depends on your definition of lakh crores, for a very long time, right? I mean, when bank nationalization happened in 1969, we were told, at least the Lok Sabha was told, that it was being done to give money to farmers, to MSMEs, and to the self-employed. And as many of you know, all of us agree that agricultural credit and MSME credit are really important parts of our economy, but they have really been stuck somewhere between 10 and 20 lakh crores. And I think the point of whether in a pandemic you can raise that may be an interesting question, right? And I think I would like to even step back even further. That says that, in a government only has 3 tools during an emergency or even during peacetime. They are, fiscal policy, monetary policy, and structural policy. if fiscal deficits could make countries rich, then no country would be poor. So you have to be a little careful with always continuously asking for, the government. I mean, central government budget is 34 lakh crores, state government budgets are about another 38 lakh crores. And the question is, obviously, the US has a fiscal deficit which is larger than our GDP this year. But the US can sustain it because it is a very large economy. And so if you want to run those kind of fiscal deficits, but I don't think India can afford anything more than the 12 to 14% that we already are running at. Public debt to GDP was 70% before the pandemic. We will probably exit the pandemic with 92% public debt to GDP. So I think it is important to accept that we are in an emergency situation and we should do whatever we can. But beyond the point, it is also important to accept that fiscal policy has its limitations, in the current structure. Now, monetary policy is an interesting question. Is it a painkiller? Is it a placebo? Is it a steroid? Whatever it is, it's not a solution to India's poverty. I think people will be careful in using, people should be careful, and I think we are careful in using monetary policy to solve problems of sort of productivity. And that brings me to the third sort of intervention, which is really the biggest question about MSMEs, right? What is their productivity? What is their competitiveness? And that is at the heart of India's policy question of, do we have a jobs problem or do we have a wages problem? How do we raise the productivity of our sectors, of our firms, of our individuals? And so I would say MSMEs, we have 63 million enterprises. Now, the question really is this only translates to 22,500 companies with a paid up capital of more than 10 crores. Now, I know a lot of people will react saying, well, why are you bringing up paid up capital? We are actually talking about credit here. And that's also an interesting question, right? Do MSMEs have less equity or do they have less debt? I don't think you should borrow your equity. I don't think you should, that has led to many of our bad loan problems. I would submit, our NPA level has been 10 lakh crores for the last 10 years. Some of that problem arose because entrepreneurs were borrowing their equity. In a certain sense, they should have had more equity, but it didn't happen. And obviously, the question for MSMEs is an interesting one on where do you raise equity for an MSME? I mean, I'm a first-generation entrepreneur. Both my companies were funded by private equity. Now, this is an instrument which did not exist in my father's generation, but we must recognize now that we only have 375 companies with more than $1 billion in market cap. But now we have 150 unicorns. Unicorns may be companies worth more than $1 billion, which are funded by private equity. So we have the highest ratio of unlisted to listed companies with $1 billion valuation in the world. It's almost 50% right now. Now, that's an interesting question. Why? Because my father's generation did not have this tool of private equity where a first-generation entrepreneur could raise money. Now, when you say MSME, I guess you're talking about a company that is small, because every company starts small, right?
Sure.
Now, some companies stay small, now some companies grow up. So every unicorn was born a small company. I mean, I was born a small company, now I may be large. So the question really is there a difference between the trajectory of what I call a baby and a dwarf? A baby and a dwarf are both small, but the baby is going to grow and the dwarf is going to stay there. Now, many people think the difference between a baby and a dwarf is money. I don't think so. I don't, just like the difference between a baby and a dwarf is not more food. I think the difference between a baby and an MSME or a unicorn is an interesting distinction that is currently playing out in the Indian economy. I mean, for an economy with a per capita income of $2,500, you would not predict 5 million people writing software code. You would not predict 150 unicorns. And so I think India is an economic outlier that our knowledge economy is somehow much larger and has come before the transition from farms and many other things. So I'm taking a little time to answer the structural question of MSMEs rather than the weather of the moment question of MSMEs. Now, why have MSMEs suffered more in COVID? Because of working capital issues, because of lockdowns. Now, many of those issues are common to big and small companies, right? So the question is, have MSMEs been more hit because their demand is of a certain kind? I'm not clear. Have MSMEs been hit because they have lower equity? Absolutely. So, has the pain for MSMEs been exacerbated or amplified by their lack of financialization? I think so. It's a perpetual pandemic in India, MSME credit, right? I would say that the only perpetual pandemic is MSME credit. So I think MSMEs are obviously went into the pandemic with lower credit to GDP or lower credit than they possibly say they needed. There was a credit gap, if in a certain sense you want to call it that. But I would submit that there is something going on in modern technology where the big are getting bigger. Now, this is not only unique to India. It is even in the US, concentration is increasing substantially. Brands are becoming more valuable. Intangible assets are becoming more valuable. Talent is becoming more valuable. And there is an element of a winner take all in many industries which did not exist in the past. So in the past, you could be fifth, sixth, seventh in some industries and still be reasonably profitable with a reasonable return on equity. At least all global research seems to suggest now that the top two or the maximum top three players are almost taking 80-90% of the profits of the industry. And I think this is a combination of globalization. This is a combination of technology. This is a combination of many things. And this is an important challenge for MSMEs. Mittelstand, which is Germany's MSMEs, are not really MSMEs. The smallest Mittelstands are, almost $250 million in revenue. So we wouldn't classify them. They're very globally competitive. Most of the Mittelstand exports a huge amount of their revenues. So I'd say India's MSME challenges are obviously amplified by COVID. But I would say that there are some structural factors going on by which I don't think we will have 63 million enterprises in the long run. The US economy is 8 times our size, and it only has 24 million enterprises. So the notion that somehow, and micro enterprises, as you have pointed out, I've seen somewhere in your SBI leadership notes, are 85% of MSMEs, right? And micro enterprises are often built on the theory of self-exploitation rather than self-employment, right? There was this Russian economist in 1920s, Chayanov, who said that small farms are viable because you don't pay yourself a salary, you don't pay your wife a salary, you don't pay your kids a salary, and you don't pay rent on your resources. And so that self-exploitation of Kirana stores or self-employment was a shock absorber in the Indian labor market. And in a pandemic, that self-exploitation has actually become unacceptable or even not possible in many situations. So that's another interesting, I think, lasting outcome of the pandemic, that the younger generation doesn't view the self-exploitation of self-employment as employment. See, why has India's unemployment rate been stuck between 4 and 6% since 1947? Because of farm employment being a big chunk, taking the labor force off the market, and because of self-employment taking 50% of the labor force. So I'd say MSMEs right now are obviously in a very trying situation. I'm not sure there are any simple solutions to their revival. I think and we can debate this, and I'd love to, whether a Ministry of Employment has any different agenda than the Ministry of MSME Employment. Are the challenge of India vertical, or are the economic challenges horizontal? Obviously, the pandemic makes us feel that our problems are vertical, but I would say making India a fertile habitat for formal job creation will actually be the best gift we can give MSMEs. But I can come back to this next after.
Thank you, Mr. Manish, for giving the entire dimension to the whole issue. Now, to take the next question to Jyoti, ma'am. Ma'am, we all know that the policymakers, state or central governments, and bankers, entrepreneurs, all of the bodies, the various bodies, including the Confederation that you're secretary of, have all joined hands with slew of opportunities and somehow creating programs and schemes for the MSME sectors to help themselves out of the be it the liquidity pangs which they faced initially, or subsequently how they can process themselves, including the various technology related issues pointed out, or the structural issues pointed out. A lot of measures got underway subsequent in the subsequent schemes in the budget and later on also in the stimulus packages. If you could bring out how, from your observations, how these MSME challenges are being, trying to be tackled, and what is that we can look forward?
So thank you for having me here on this panel. I think Mr. Sabharwal has given a very wide dimension to this whole issue of MSME, and I completely agree that MSMEs always have had issues, and I think we need to. The COVID has only accentuated the problem. I think the first wave brought some problems to them, and I think they were just getting out of it. But the second wave kind of hit them severely. Of course, government has tried to help them in many ways. And yes, I wouldn't really box it into just the COVID thing. But yeah, just because COVID happened and it has accentuated some of these problems. So some of these dimensions have been studied in the light of some policies which were brought out by the government and the Reserve Bank of India. So ECLGS was one of those policies which was brought out, which did good to the to a lot of formal enterprises. But the only issue out there was that there are MSMEs which do not have formal credit record, and they did struggle for funds. So it is difficult to arrange funds for MSMEs in country in any case. So if the CLGS extension could have been, beyond that realm itself. And you did talk about, I think Mr. Sabharwal did touch upon some of the technologies which are changing the entire face of, the funding and the financialization. I think two aspects in financialization, which is NBFCs and fintech. I think these are the two areas which need to be explored for banks to really work with. I think a co-lending model with NBFCs who really have ear on the ground and very deep understanding of the the business models of the smaller companies. I think that's something which you all are pursuing, but maybe in a bigger way this needs to be pursued. And I think fintechs have exploited a lot of data, etc., which is available, and so they are very fast and nimble, and the digitization has really it has created new dimensions in the whole credit in the face of the credit history of the country. So I think all that is getting mapped very well, and a lot of information is coming there. So I think partnerships with fintechs, which is already happening, maybe need to happen in a more vigorous way. I think that should be something which we feel is something which can really help the MSMEs in overcoming some of these finance challenges. The other problem, which typically MSMEs have been facing, not now, but for many years, I think ever since we've had small and medium enterprises, is the problem of delayed payments. And TREDS was a wonderful mechanism which has been introduced by Government of India. One of the the suggestions out here is to create more awareness. And I would just like to quote, a finding from one of the FICCI surveys, which we had done with over 300 MSME participants, that showed that, about 55% of the survey respondents were not aware of TREDS for facilitating the financing of trade receivables of MSMEs. Also, in the same survey, we found that utilization of TREDS remains restricted to MSMEs working with large corporate buyers, whereas over 65% of MSME transactions are actually within MSME themselves, with no links to large corporate buyers that are currently not in the purview of TREDS. So, keeping this in view, we at FICCI had suggested that every tax invoice which is raised by GST registered MSME unit, if this could reflect automatically on the respective TREDS platform, where MSME unit is registered, and after the service or the good has been delivered, within 7 days, the corporate could accept or reject it automatically. And, this can automatically get published after that period. That can get published, and, you can, the banks can actually extend funding basis, these invoices which are which are uploaded through the TREDS platform, and corporates can actually, if they reject any invoice, then they have to give some reasoning, etc. And there are other issues, which government is making some efforts, but I think the quality and standards again is an issue where MSMEs have been fledgling for times unknown. Even the lack of knowledge and resources for exports, I think we need to have a common platform, etc. But much of it, as I think Mr. Sabharwal had said, it's about the ingenuity of the entrepreneur himself, how much he really wants to be bound within the constraints which are there for the MSMEs, or they want to really, look at more innovative ways of coming out of that box and blooming themselves into the larger enterprises, given the the digital avenues which are available today, which can really make them make them bloom beyond the realm that they are used to working in their function. So I think there has to be a complete rethink on how the MSMEs can really survive and can actually become more meaningful in the economy. I'll just leave there and maybe answer some questions later.
Thank you. I'll come back to you with more questions. And just to continue our discussion with Mr. Manish, you had pointed out the lot of structural aspects, which is in the larger scheme of things of MSMEs, and with the kind of predicament that we are placed, especially with the compulsive situations of somehow surviving the initial days of the pandemic and the various programs, that has been launched by the government. We also know that there has been a lot of programs on somehow, in the subsequent budgets and all, which gave a lot of importance to MSME's way of looking at the market side of it, be it the defense protection or Atmanirbharta and so on. How did you, was it really, or including production-linked, incentive schemes, in sectors like textiles and other things which were traditionally been higher employment-oriented sectors. In fact, of late, very recently also I came across, there has been further announcements on the investment side in the textile, but under the PLI schemes and so on. Now, so many such reform measures were also initiated along with the kind of, stimulus packages or the monetary, as you correctly said, the monetary and the fiscal aspects side of it. Now, on the structural reform side of MSMEs, was it how many of these things had taken effect, and is there anything that the pandemic situation has taught us to reform ourselves, and how MSMEs had taken it?
I think that we have to step back and understand, why is our capital handicapped without labor, and why is our labor handicapped without capital? Right, we essentially have 63 million enterprises with lots of employment, but little less capital, and we have 22,500 companies with a paid-up capital of more than 10 crores with lots of capital, but they treat employment as a disease, and they are automating the hell out of their production processes. And so I think it's important to recognize that we put in a regulatory system in the 1950s, 60s, whether it was the second Avdi resolution of 1955, which was captured in the 1956 second five-year plan, which essentially created a lot of regulatory cholesterol for companies, right? The view of enterprise was that you would kneecap entrepreneurs, you kneecap capital markets. And I think the biggest unfinished agenda of 1991. I know we like to do the Jai-Jaikar of 1991 because economic reforms began then, but we do have to remind ourselves that India and China had the same per capita GDP in 1991. And today they are 5 times more than us. So we are, I think, if anything, COVID has reminded us that we are 5th in the world in total GDP, but we are 138th in the world in per capita GDP. Now, per capita GDP is a more complicated thing to raise, right? Because total GDP is often linked to population and you can raise a little bit of productivity and get it. But per capita GDP requires human capital, requires productivity of firms. And we have very high unevenness. So if I think of the one thing that COVID has reminded us, it is the enterprise regulatory cholesterol. You know, there are 69,200 compliances for enterprises in India. There are 6,700 filings. And actually embedded in this 69,000 filings is 22,480 ways to go to jail. So it just to me seems that we have lost track, you know, and I have argued with the government, and now the government has accepted this point of view that our ease of doing business rankings went up. But that was not reflected in the daily lives of small entrepreneurs and large entrepreneurs. And large entrepreneurs like me, I have 125 guys in regulatory affairs whose full-time job is handling the regulatory cholesterol. But small enterprises will not be able to do that. So I think that the biggest structural reform which is unfinished is cutting this regulatory cholesterol. And this is across state and central governments. It's about 1,480 acts. But the level of criminalization is just excessive. You know, I mean, these are all should be civil offenses. They have been made into criminal offenses. There is way too much duplication in the filing. And there is way too low a definition of a compliance. You know, the philosophy has to change from prohibited till permitted, which is what it is today, to permitted till prohibited. You know, and I think this is at the heart of making life for MSMEs easier. Because, and unfortunately, the challenge with policymakers is they think an employer is Tata or Infosys. Tata and Infosys are sampling errors by India's employment stack. You know, most people are small, most people are not. So I think once you start thinking about the typical Indian enterprise, which is the MSME that you've been thinking, I think that things like Atmanirbhar, things like the production linked incentive are a little different from the license Raj, because the production linked incentive is available to Samsung as much as it is available to Micromax, right? So we're not distinguishing between you have to be Indian to sort of get the production linked incentive, which I think is a good thing. I think, you know, the broader theme of sort of making India a fertile habitat for MSMEs, the three structural things which I think I have just been reminded of by COVID were reducing regulatory cholesterol, raising our credit to GDP ratio, you know, raising the human capital agenda. You know, the national education policy of 2020 was passed during the pandemic. Instead of a 15-year glide path, we should bring it down to 5 years of implementation. So if we do regulatory cholesterol, financialization, I mean, raising credit to GDP ratio to 100%, and we do the human capital interventions, I think those will be the broader gifts we can give to MSMEs, right? The role of the government is not to set things on fire. It is to create the conditions for spontaneous combustion. You know, when you try to set things on fire, then you have to pick winners or losers. Then you have to choose who is which, you know, is leather a child of a better god than software. You know, software is an oasis of high productivity. You know, it's important to remind ourselves that 5 million Indians now export more software than Saudi Arabia exports oil. 5 million, the Indian software industries employs only 5 million people. Last year, they exported $165 billion, $157 billion of software. Saudi Arabia last year only exported 143. So if 5 million Indians, so 0.8% of India's labor force produces 8% of India's GDP. So it's a process of high productivity. Obviously, there's some very large players like Accenture, Infosys, IBM, Indian and foreign. But the startup industry is all a child of MSMEs at some point in time. All of these were MSMEs. So some MSMEs are more productive, some MSMEs grow. So I think that rather than picking, you know, that we want to have people in leather, we want to have people in light industrial manufacturing, it's very hard ex ante to know which industries and which companies would succeed. So my bet is if SEZs are a good idea, make the whole of India an SEZ. If labor laws are toxic for big companies, they are for small companies. So I am a little hesitant with very specific MSME policy, just like I was very hesitant with the Mahila Bank when it was set up. You know, I'm a little, these gimmicky concepts are good to make announcements, but they very often don't move the needle for where the rubber meets the road, right? right? I think that 29 chief ministers matter more than one prime minister. I think 100 mayors matter more than 29 chief ministers for MSME entrepreneurs, because large entrepreneurs can substitute for the state. We can generate our own power. We can, generate our own electricity. We provide our own transport. We provide our own security. Small entrepreneurs cannot substitute for the state. Very often, I think another big intervention, which I think COVID reminded us, that central government has a budget of 34 lakh crores, state governments have a budget of 38 lakh crores, but the 2.5 lakh local government bodies, Panchayat Raj and municipalities, only have a budget of 3.4 lakh crores in this whole country. And they only raise 34% of that themselves. The rest is a devolution. So I think that this MSME problem, if we either try to solve it by being gimmicky, which is by giving them loans, you can't solve a solvency problem by a liquidity solution. Banks have lending powers, they don't have spending powers. So I'm very, very worried when banks talk about helping MSMEs. I think you can lend to MSMEs, but you can't help them. I mean, the key to lending is getting your money back. So I would submit that the structural reforms of regulatory cholesterol, credit, and human capital, if we complement with local government, that is when we will truly help our MSME entrepreneurs. I don't think that they are handicapped in any way, but they are unable to substitute for the state, which many big companies do. I have a very large fleet of providing transport to my employees. Obviously, we have 100% generator backup. Obviously, we provide a lot of security. In fact, just like SBIL, you're manufacturing your own employees, right? In some level, a small bank will not be able to manufacture their own employees. But as your director mentioned, you have so many institutes because obviously there is some challenge in the employability at the entry level of the candidates you get, and then you take the time to repair or prepare them for what you need them in the workforce. Now, big companies can do that. TCS runs in the world's largest corporate university, but I don't think MSMEs can do that. So I think the structural reminder of COVID is that big companies can substitute for the state, small employers cannot. So we must really build the gaps in public infrastructure and public goods if we want MSMEs to thrive. I think he's frozen. Jyoti, can you hear me or?
No, I can't. I think he's frozen. Some net issue.
Do you want to add to that? We can continue our conversation.
No, I completely agree with you, because it is the cost of doing business and competitiveness clearly, and regulatory is one. So we working with the government on ease of doing business at FICCI and CMSME, trying to actually identify, the real pain points, because I think two big initiatives which the current government has taken is to identify the regulatory issues and the decriminalization, because these are the biggest constraints for any business to really be able to come out, on their own. The regulatory cholesterol word that you have used is very significant, because that flab, that spend that you have to make, which is unnecessary, but it is required by the government because they want to look into every aspect of your business, is something which is very critical. And I think states are now vying with each other to really see how they can really improve the business environment, in their own states, and become more competitive in inviting, companies to, they make the states the entrepreneurial hub out there. And the current exercise which the government has really set out to, I think it's a bit slow, but they've actually started to identify where the shoe really pinches for the entrepreneur, and they are now starting to work with each department in the government of India and also at the state level to see how these can be resolved. So there's a lot of discussion which is happening, and I think that is something which can really change the landscape of entrepreneurship in the country, apart from whatever 1991 did to the entrepreneurship ecosystem. So I couldn't have agreed more with you on that. And ease of doing business exercise was happening, but I think that was very limited to just kind of work on the rankings. And of course, I think there are also aspects like IBC and whatever problems they may be. But the fact that we had an IBC and a GST, and IBC itself helped us, really improve on our rankings. But the aspects where the shoe really pinches is something which is very important. And also I think the competitiveness overall and the cost of doing business is something which the government
Do you think GST has hurt MSMEs or helped?
So GST did hurt. See, I think demonetization and GST came back to back. And that is where the whole, I think the ecosystem of MSME got hurt because they were not prepared. And I think there were too many changes that happened out there, and there was lack of stability. But now the things seem to be stabilizing, and I for one am the believer that if GST did not happen in that year, GST would not have happened. And GST in the long term is good for the country. Yes, it did hurt in the short run, but I think that over long term there'll be far more transparency and far more gains coming to the economy as well as to the businesses. And the point that I'm talking about, the GST invoicing, it might appear to be a very small issue, but with this you're able to actually capture a lot of information of the informal economy which wasn't available earlier. So I think, yeah, I do feel that GST in the long run is good for the economy, and the good part is the government has been taking corrective measures.
Could GST and the information, the account aggregator or just the GST information, you think it'll raise credit to GDP ratio in the long run?
It could potentially if they're able to use the data properly. I think the 59-minute does have the GST data included in that. I did talk about, the threads. If they start including GST invoice in the threads, then there is a lot of transparency out there as to what the delayed payments are. And also, if the banks are able to provide credit against the GST invoice, given that they have the visibility of, the books of the MSMEs, I think that can be a good game changer. And that is how I think account aggregation, this is going to be a very important parameter. But we have to see how the data privacy laws really, going forward, help us use this information. And the other aspect is, I think, the contract, the dispute resolution, which is something which the country really needs to work on, because that's where we do very badly on ease of doing business. And I think that's one area where a lot of effort is required currently. The whole judicial process and the whole contract resolution process and the dispute resolution aspect of it.
Swati, you want us to just continue our conversation, or are you coming back, one of you? We can have to chat. We have a lot to talk about.
No, I think
Hello, I have a question.
Is anybody back? Yeah, we were a little lost because he had gone. Yes, sir.
Ms. Jyoti, this is a question. This arises out of my extensive experience of having handled MSME accounts as operational heads in various cities in India. What Madam Vij was saying is actually something that transpires everywhere. Because of lack of enforcement of contracts, the MSMEs are still somehow able to handle all the millions and thousands and ones of regulations. But when their money is stuck, that is where they go belly up. They are now quite capable of handling the serpentine regulations that we have. But when the money is stuck, and that is where the enforcement of contracts comes into play. And sometimes you will find that the big corporates are the culprits. So how do we do that? Because this is kind of a relationship between a David and a Goliath, and the David is not able to do anything, just wait for their mercies. And very big and famous corporates also hold back on payments. Government holds back on payments. So they're totally helpless, and we have ended up giving TODs to such temporary ODs to such MSME units to enable them to sail through the difficult period. Because we have at the same time enforced very strict asset classification norms. So they are, caught between the hammer and the anvil. So this is something that I've experienced. Is there any solution for this?
Listen to Jyoti ma'am.
To me?
Yeah. Yes.
So I did talk about at least one aspect of the delayed payment, which was, if we can really look at including the GST invoices into the TREDS platform. So once that is there, then, the banks would really know that these are the payments which accrue to the, the MSME. And at least you will have the visibility of the revenue flow, which could possibly be there for that particular unit. So that's a good backup information which could become available. And then it also brings a lot of transparency, because you will give the option to the corporate to either accept or reject. And if the rejection comes with an explanation or an acceptance is already made, then I think it does potentially help solve the problem. We will know the reality when we come to it, but I think that's one potential solution which appears to be there. And also there is a need to include the other MSMEs, because as of now the entire TREDS platform is limited to the large corporates and not to the medium-sized corporates. So there is a lot of transaction, most of the transactions which happen between medium to medium. So how do we really take care of that through the TREDS platform? So I think TREDS is a very good solution which has come about, but there is a need to create a lot of awareness. I did quote some of our survey findings where we find that awareness levels, and this is something which we have done across the country, across the length and breadth, and there is very little awareness available about TREDS. And also we at our organization, as well as in FICCI, I mean, of course, apart from CMSME, at FICCI, we've been trying to work with at least our members to see that the payments which accrue to the MSMEs are, that they do honor it on time. But you validated my point on, the whole mechanism on the contracts and the dispute resolution. I think that still remains to be addressed at the larger level. So that's something which is very important, how to really honor your contract and timely be able to get your monetization of the work that you have done. I hope that has answered your question.
Yeah, true. Thanks.
Thank you, Director sir.
I'd like to
Please.
disagree with Director sir a little bit that MSMEs have learned to handle the thousands of regulations. The transmission losses between how the law is written, interpreted, practiced, and enforced are basically code for corruption. And I think that the law as it is written is not how it is interpreted, practiced, and enforced. And I would submit that our MSMEs are not the Mittelstand of Germany for many reasons. But one of them is the reason is this Inspector Raj, which has these criminal powers, which they don't use. Since 1962, the Apprenticeship Act, when it was written, it had jail provisions. Right. So either you use these laws to put CEOs in jail and say you haven't taken an apprenticeship, or we should have 15 million apprentices. So what happens is with laws, when people say that we have learned to live with them, is essentially low-level corruption that leads to low level of productivity. I would only just urge you, and I would love to hear your take, sir, that if these bills which are delayed are from high-quality corporates or from government, and which means they are good credit, they are not going to go bad, they are just going to come late, then what is the problem with extending that credit? It is because these MSMEs are undercapitalized from an equity perspective, right? Or they are already over leveraged, because sometimes I guess that is the question, right? That they are not, they are already over leveraged. And is that the challenge, or is it the fact that they don't have enough equity which will support?
One of the challenges. That is one of the challenges. Plus the whole process of allowing them over leverage is very onerous. You have to go through a very dense drill. before you're able to give it. The whole idea is to make the process very easy. Apart from the fact that I have found one more experience is that the promoter and his CFO are on two planes. The promoter does not understand bookkeeping mostly. She will come and tell me, or used to tell us that ye mera area nahi, mera CFO bolega. Then I had to tell him that this is your money that is going into it. So the basic understanding of bookkeeping you should have, what the ratios mean, etc., and how you can, your CFO may play with the ratios and give you a very rosy picture, while the actual situation may be entirely the opposite. So I think one of the suggestions that I always used to give wherever I could is that before you become an SME entrepreneur, you should have some rudimentary knowledge of bookkeeping. Either you make it mandatory for them to get a certificate, or they should be urged and encouraged to do that. Many promoters I have found have become too ambitious, and the CFOs, since they are employed by them, by the promoters, do not have the gumption to point out that whatever you're thinking is beyond your ability to deliver. Please do not do that. They simply acquiesce into the arrangement of what the promoter's ambition is, and then everything goes asunder. Many cases I have found, and whatever I could do, I used to do, but this is a gap. The promoters have to be aware of the basic rudimentary principles of bookkeeping.
But that may not be an MSME problem only, right? Bhushan Steels has more loans than India's central government allocation to primary education, right? So I would submit that over leverage is not, is it a human capital problem, or is this some, uniquely over leveraging is not a uniquely MSME problem, right?
No, since we're talking about MSMEs, so whatever my experience is, that is what and most of the MSMEs are very well-intentioned. I have 90% of the people are very well-intentioned, and because they are putting their lives into it, the lives, earnings, the entire, their physical existence is for the whole enterprise that they have set up. So their intentions are very noble, but there are times when you become helpless. You're not able to do anything. You are kind of caught in a pincer movement from, with anti-factors coming in from all sides, and you watch helplessly as things go out of control. And
so, but what typically, how does the bank really support the whole digital, the financial literacy aspect amongst the entrepreneurs? Do you really make some effort towards it?
We do. We hold, seminars and, try to educate them and tell them that these are the various things that you should do. Plus on an individual level also, we try to tell the promoters particularly that you should be more aware of the bookkeeping part, because your CFO, being your employee, will not be telling you the truth always.
But one of the major issues which the the MSMEs really face, and I'm sorry, I'm turning into a question from our side, but the whole aspect, it's the end-to-end support that is required, which is right from the production, from the financing to production to manufacturing, and now to marketing, and now the whole digital transformation which is required for them to survive in this new world. So how can the banks really support in this whole aspect? Because if your credit has to be good, the whole business model therefore has to be good and to be supported. And they are not the ones who will be able to get the McKinseys and the BCGs of the world to support their business model. So is there a way that there could be some kind of hand-holding at the banking level? And I do understand that some stuff happens at the State Bank. I've read about these issues, but I wanted to kind of learn more so that units could actually understand some of the stuff that you're doing.
Yes, you see, it's like this. At an individual level, the operational functionary does interact with the entrepreneurs and tries to handle them and counsel them as to how to go about it. At an institutional level, we used to have consultancy cells at one point of time. Currently, I'm not in touch with the MSME thing because I'm away from it, so I would not be able to tell. But this is what is something that we going forward need to do. As far as digital help is concerned, we have various products that we have for them, and we are constantly evolving. And so we have 17 lakh SME accounts. We have an exposure of around 2.5 lakh crores, but this could be much more. This could be much more.
Thank you, sir. And ma'am, to both the esteemed panelists, to come back to our way of deliberating. Thanks for pitching in to our director and also to keep the discussion going. Sir, coming back to money, sir, we all know that now the billion-dollar question as far as the banker community is concerned is that the kind of refacement or restructuring options given to them are all coming to an end by September. And how kind of big a hole it could inflict on the MSME portfolio is kind of anybody's guess as of now. And in fact, this is a moot point that comes back to us as trainers, as coaches, whenever we deal with many of our executive trainees who come up. They are, in fact, you find in the chat box also somebody asking why the second restructuring option is not being given by the government and things like that. Because, they're all aware that, since the party is always in contact with our the banks, they know pretty well that, how this portfolio would behave going forward. Maybe many would behave properly, many may not also. And what is the kind of prognosis FICCI kind of institutions have on this, and what is the stand you have taken with the government? And to Manish ji, how do you see this, sir? Because these are again billion-dollar questions to the bankers. We cannot be there in this endemically by giving already a 2-year long rope is given, and further restructuring and refacement of loan scope is there or not is one point of it. And especially when it comes to the micro credit, again, the question is far trivialized that we don't for sure that many of these business models exist or not. So that kind of questions. Over to you, sir. And then followed it with ma'am also. Yeah.
No, so I think it's unmodelable, right? We have to accept that, economists destroyed their reputation with the 2008 financial crisis because they overplayed and did not understand what was going on. I think epidemiologists have not been as intellectually humble as they should have been during COVID. I think there is a reason you can't buy a plane ticket from Delhi to Bangalore for 2030. Because there's too much going on. In fact, if somebody tries to sell you a plane ticket from Delhi to Bangalore, you shouldn't buy it, right? The airline may not be around, oil prices may have changed. So I think if there's something that COVID has taught us, it is that resilience is as important as performance. I would submit many of us in the corporate sector, in the excitement of high tide, had forgotten what low tide looks like. Obviously, COVID is much worse than low tide. It was a paralyzing of the system. It was a destruction of demand. And many people compared COVID to war. So it is an unfair comparison because war creates demand. COVID has been destroying demand. So I think it's an important lesson for all of us that resilience. And what does resilience mean? I think resilience means different ways of thinking about debt and equity. I think many of us entrepreneurs in the newer generation own only 15 to 25% of our companies. Most of the older Indian entrepreneurs own 60 to 70% of their companies, right? The average stock holding in the stock market is 51%, right, of promoter holding. But all of us who are first generation entrepreneurs, my father worked for the government. I didn't have any money. I raised 2-3 rounds of private equity. I own 18 to 20% of my company post listing 5 years. So I think that we will see much lower equity holding among companies because you will have to raise more equity. We will have different kinds of capital structures. I think many companies are thinking about different ratios of fixed cost to variable cost. in high tide, you tend to make all your costs fixed, but in low tide, you remember that you want to try and variabilize your costs as much as you can, because that then creates more resilience. So I'd say it's very hard for us to model what will be the impact. I mean, I know you may have seen some of the financial stability reports, which in worst case, we had brought it down to 8 lakh crores total NPAs in the system. It may go up to 14 lakh crores even in some situations. But I'd ask Jyoti, I mean, they have an economic modeling also of this.
Oh dear, ma'am.
Yeah, I mean, I will do disservice if I don't say that there are asks from the MSMEs, of course, and being the representative of the association that I belong to. There are, I mean, of course, obviously observations around the NPA norms. A few years back also, RBI had increased the time period from 90 days to 180 days for a certain period. Maybe it's time to think about that, because if you ask me about the state of MSMEs at the moment, I mean, everybody knows that it's not doing good. And anecdotally, we were told that 1 out of 100 units would actually go down under. And I mean, I wouldn't be able to say how many of them are, leveraged and how many are really banking with, in the formal banking system. But if there are, then impact is obviously going to be there. And 10 out of these would definitely be very badly impacted. So, and we are in the process of actually undertaking a survey to understand the real impact on the ground, and we will be in a better position to give you that answer. But broadly speaking, I think one is, of course, that the NPA norms can be reconsidered again. It was done a few years back, and this is the unprecedented time. So therefore, an unprecedented measure perhaps can be rethought through again. Similarly, I did talk about ECLGS. ECLGS is going to be, the time period is coming towards an end, and also this was while a lot of it's been expanded to a lot of other sectors and stuff, but more of the MSME units can actually get into it. There are so many of these units, but only a handful of them would have gained out of the ECLGS because you required a formal credit line. And then also the restructuring which was announced again, the date, which is the facility, this whole facility has been restricted to the MSMEs, which were classified as standard on the 31st March 2021. So one of the asks has been that, the MSME accounts which have become overdue and or NPAs which are between March 2020, which is post onset of COVID, and 31st March 2021. So if such accounts can be regularized and they can continue to function without interruption, as I said, these are the asks. I'm not necessarily going, to the economic impact of it. I do agree. If we look at, the larger play which happened around 2008 post global financial crisis, we did talk about, stretching the entire leveraging beyond the actual ability of the economy to absorb. But I think we need to have a middle path out there. We can't let all the MSMEs go down. The financial stability report also does talk about, the impact that it is going to have, at least on the stress sectors. It's going to be pretty huge. From the last report to this report, I think the problems which have been projected for these sectors has only accentuated. So we may have to think about, some ways of restructuring some of these MSME accounts and ensure that they don't really fall into NPA.
Thank you, ma'am. And coming back to Manishji, sir, it is also true that I mean, when we talk about MSMEs, it is not that we can speak MSMEs in isolation. Take the sector like automobile. Many automobile ancillaries are highly dependent on bigger lot of corporates for their sustenance, for their orders and whatnot. So when an industry like automobile, which is in a state of flux, perhaps don't know what to manufacture, whether should it be an electric vehicle or conventional, petrol or diesel kind of a vehicle, or on top of it, you also had a lot of other norms coming in. Plus, you find suddenly a lot of exits also happening. The Harleys and Fords of the world of late, and all this, is playing spoil sport to the whole ecosystem of the automobile industry. And in the back of it, many of the MSMEs are obviously connected in this. So, I mean, isn't it a double whammy that we cannot speak MSMEs in isolation? Many times it could be related common scheme of things. I mean, in that particular domain industry or the so-called corporate to which they are OEMs or whatever.
I mean, I think the exits, withdrawals, failures are an inherent part of capitalism and business, right? I worry about, socialism was basically capitalism without competition and bankruptcy. We only got we got competition in 1991. We got bankruptcy only a few years ago. I have started 3 companies in my life. One failed, one was a moderate success, and one has been a success. And I am obviously a child of the service economy, right? And I think there is a broader phenomena in knowledge businesses of capitalism without capital. Intangible assets, fixed assets. My fixed assets are, 8 crores. My balance sheet is 6,000 crores. So, you can so you have to remember that I think there is a economic transformation which began with obviously till 1820 per capita income was the same all over the world because till the Industrial Revolution, I think till the late 1900s or 2000s, there was an industrial economy which China did a remarkable job. I mean, in 1978, Deng Xiaoping was not only very skilled, he was also very lucky. He got a 30-year super cycle of global growth, global openness to trade, and basically global deconstruction of supply chains. Now, every time we think about India, we say we will be China when we grow up, right? I don't think that's true. I think that there was manufacturing has changed, global trade has changed, and global growth will be muted in the next 20 years. So I think that the nature of business is becoming much more volatile. And so bankers will also have to think about, how they will make their business models sort of more resilient. I am a big believer that, bank regulation is not about protecting loans or banks. It's about protecting depositors, right? Banks don't make loans, depositors do. So it's important to remember that and keep reminding, I know there are customers like MSMEs who are in pain right now. Obviously, banks, some are capitalized, some are not. But finally, financial stability is about depositors, who provide the raw material to banks. So I am a little hesitant in proposing similar solutions that we did between 2008, nationalized bank credit went from 18 lakh crores to 54 lakh crores in 6 years. And I'm not sure that was a good idea. Some of that was in the name of, real pain or that bankers need to help out in a crisis and it's a once in a lifetime crisis. Actually, what's happening is because of volatility in the world, we're having a once in a lifetime crisis every 10 years now. So maybe there's something wrong with our model or our definition of once in a lifetime. So I think that what is happening in the last 20, 30 years is that volatility is accelerating. Unforeseen events are coming much more frequently. And all of us, whether we are bankers or entrepreneurs or equity investors or economists, will have to update our models. I'm not saying that, we should suffer the disease of presentism. Historians warn against a disease called presentism, where you believe today's circumstances are so special and so unique that no generation has ever faced this before. But I do think that at least in my professional life, I only joined the workforce in the mid-90s. I was a child of post-liberalization. I think volatility is not something you can point to as an alibi anymore. Volatility is a dial tone. Volatility is here to stay. Political risk is here to stay. So I would just submit that One of the most interesting quotes that I read during the lockdown was by Jonas Salks. He's the inventor of the polio vaccine. He said the most important question to ask yourself is, are you being a good ancestor? It's an interesting question, right? As a board, are you balancing the next quarter and the next quarter century? As a policymaker, are you balancing this cohort with the next? Intergenerational equity in the US has been thrown to the wind, right? The US had $10 trillion of public debt in 2008. Today it has $30 trillion. So $20 trillion of debt has been added in the last 14 or 15 years. Now, you can steal from your grandchildren all you want. So why I'm taking this question to this level is because I do think that some of our business models will need updation. I think volatility is much more higher than it used to be and much more frequent than it used to be. So exits like Ford or Harley will happen much more. But so will entries of companies like Ola E and other. I mean, an electronic car only has 4,000 components. Internal combustion car has 22,000 components. So I think there's a lot going on. Technology is. I mean, people a few years ago hyped it by calling it the fourth industrial revolution. But I do think that digital literacy, mandatory digital literacy, which was forced by COVID onto the whole planet, is really going to have huge implications for many business models. And I think capitalism without capital, if 20% of the world's bonds now trade at negative interest rates, and 20% of the world's bonds trade at less than 1%. So 40% of the world's bonds now trade at less than 1% interest rates. Now, some of the people in the world believe this is quantitative easing and this is, central banks messing with fixed income markets. But interest rates have been a secular decline from the 1970s. All over the world. So I would submit that capitalism, interest rates being in secular decline really challenges the traditional business model of financial institutions. In India, we have had, so I think there's a lot going on. Let's not call it the weather of the moment, but let's not wish off secular trends in finance as sort of being something that we can wear a helmet and hide under our desk and then the storm will go away and we'll go back to business as normal. I think fintechs are a real disruption for finance. I think non-banks are a real disruption for finance. Many banks in India, if we want to raise credit to GDP ratio in India, one of the things we'll have to do is erase the apartheid between banks and non-banks. There has been a very huge firewall between banks and non-banks. And I think that firewall is important to remove legislatively. It is important to remove in the minds of the regulator. And it is also important to remove in the minds of the players.
Thank you. Thank you, Msmes. And ma'am, over to you on, we all know that in the MSME, when we talk about MSMEs, a good 45 to 50% of MSMEs are export-oriented units. And they had to have the brunt of it being faced during the initial phases with the all order cancellations and so on. But they had come back in the last 2-3 months performance are, anything to go by. I mean, we cannot think of a revival of MSMEs unless otherwise we are going to take the exports also equally seriously. And there has been a lot of schemes on that, the road tap scheme and, all those things are getting talked about already. Maybe some of them were late and, many of them are getting lapped up also. If you could throw more light on how the competitiveness of the export sector, especially with the, MSME kind of form of exports, are kind of a backbone in our clawback, strategy.
So I, at the initial stage, I did talk about, the overall competitiveness of the industry, as well as the need for the right kind of information, and also the issues like the quality and standards which we need to maintain for MSMEs to be really part of the export chain. And I think This requires a tremendous amount of hand-holding. The Government of India has done its bit with ROTTIP now coming back properly defined. Of course, there are a few sectors which have been left out, but I'm sure they will look into all those details going forward, and some anomalies will be corrected. But I think much of it lies in the lack of knowledge and information, and it is the combination of these two which really restricts the enterprises to venture into new waters, as they have the fear of losing the limited resources that they work with, and are not really in a position to calculate the risk, and hence they avoid many risk-making decisions. So we at the FICCI CMSME have been trying to really help the MSME units understand the market information of each of this is product wise as well as market wise, and we are working with the Buying Agents Association to serve the MSMEs of the country who are aspiring to be in this area. We've been organizing a lot of online sessions to educate them about the needs and the benefits and various processes, and also the funding of exports. And we do invite export experts from a lot of countries to explain them about how to really approach these markets, what is required in terms of designing, the quality, etc. And we keep sending the latest information about government schemes. We keep sharing with them. We stay in touch. In fact, we are currently in the process of undertaking a project along with the Asian Development Bank. This is on the internationalization of SMEs. So under this, SMEs of India and Greater Mekong region are connected with each other virtually, and the project enables them to scale up their capabilities and business opportunities in other countries. So FICCI has developed a dedicated portal titled Bike, and we arranged the B2B meetings virtually. During the pandemic period, obviously, we are doing virtually. The idea is to actually be able to create physical platforms as well. We've also, worked with, I think Mr. Sabharwal talked about the ENBFCs and the fintechs, etc. We work a lot with both of these entities, try to create more information around, the products, which are the new digital products which are coming in through the fintechs and so on and so forth. Also, a series of sessions that we've done along with the CIBIL, which is the market information, which is the financial information available, how you can actually use the CIBIL platform to have all the information related to the borrower be there, which can be used well with banks like you. So to be able to kind of, fund them going forward. We've also been partnering with TREDS platform to create a lot of awareness about the utility of TREDS, how this can be used for reducing the stress on the working capital. E-commerce, as you all know, is a growing area, and we at MSME also perceive that MSMEs have brilliant opportunities without any intensive investment. So along with the likes of Amazon and Shopify, we have conducted a lot of sessions, and these are oriented towards export. These are B2C market opportunities which are available. GEM is of course more tuned to the local requirements, but with Amazon, etc., we've been doing a lot of B2C opportunities that could be available for the MSMEs, and we've conducted sessions to educate them about the need and benefits of e-commerce, and also help do some capacity building of the MSMEs. But at large, of course, it is always the competitiveness within the economy, and more so for the MSMEs, which would really help them, attain the global aspirations that we have. And also the information asymmetry, which is there, flawed about a lot of government schemes, or even about, a lot of information that may be required. I think that information asymmetry has to be addressed. There can be a common portal by the government. I mean, these are all tools which can be made available basis, a lot of experience and a lot of information that we keep getting from CMSMEs. How well these have to be used is always the ingenuity of the entrepreneur himself. But if we can actually put the cart out there, then perhaps it can be well utilized. And also the issue about the quality and standards, which I had raised at the beginning also, there, of course, if the government can really think of hand-holding them and providing them, a proper infrastructure of being able to meet some of these global standards for, reaching out to the export markets. I think that's, again, another one which most of our MSME units keep talking about all the time. This is all based on the feedback that we keep getting on a daily basis, from our members.
Okay, thank you, ma'am. And this is also a call for all the participants. If you have any questions, you can flag it in the chat boxes, which we'll be taking up. Whatever you have put in during the registration phase, we have already added to our esteemed panelists. So, this is again a chance for you to flag off any questions, which I'll be taking up during the Q&A sessions. So since we have hardly about another 30 minutes or so, possibly 15 minutes, we can entertain questions. Ma'am, there is one question alongside of what you have told. So you are telling that kind of surveys that you're doing on the current state of affairs in MSMEs and all. Is there any specific study you have done on the micro units also? Because micros are obviously now the major, in the scheme of things, the affected lot. And in fact, I see a question in the chat box also. Hard hit sector is the micro units where large number of employment is. There is an issue of quality and mostly availability of market. Lack of timely sale of products casts impact on capital and ultimately survival. What can be done by using simple digital system to support micro units is what this gentleman, Mr. Sujay Kumar, is asking. To again extend the particular question, just wanted to know, is there any specific intervention which the Confederation has planned for the micro enterprises? We all know that, in fact, there has been a lot of demand from micro enterprises to even carve it out as a separate one instead of calling it as, bracketing it with MSMEs and all. But I think last budget it was not taken up. So I really want to know, 300 crores share capital and micro enterprises are getting bracketed in the same lot. Doesn't make much sense, is what perhaps many would feel. So what is the take from the FICCI side? Yeah.
So 50% actually of our CMSME membership is of the micro units only. Okay. So I think most of the points that I'm sharing are from the micro units, because typically, they do start a business out of an idea, but it's very difficult for them to, to really take it forward and be able to exploit all the opportunities which are available. So all the suggestions, most of the suggestions which I've made are largely based on the inputs which we have received, particularly during the COVID times, from our constituents. And this is obviously all based on the interactions that we've been doing with them on a regular basis. So much of the information which I've shared, whether it is relating to, the financing or the non-availability of the information around, the exports or, and lack of awareness around trades, etc. Even a lot of regulatory compliance issues that they face, they're unable to kind of cope up with those issues completely. In fact, we've had calls from people saying that, I have certain idea of setting up a micro unit, but do I need to register myself under Shops and Establishment Act? So there is some kind of worries around those aspects. These are very basic things which hold back people from even declaring themselves as a formal unit. In fact, we've done a study of the informal units. This was post demonetization. At that point, we wanted to understand how much deconstruction has happened in the informal space. And obviously they did come out with the impact that it had on them. I mean, that's another story, but the point I wanted to make was that we talked about why you don't want to get into a formalization process, despite having so many schemes at the government level which are meant for the formal registered units only. In its whole fear of the inspector Raj, its whole psyche of these compliances which keeps them away from the formalization of the units. So when you're talking about the whole ecosystem, entrepreneurial ecosystem, I think that if we are able to take that fear of the inspector out of this whole entrepreneurship, we will probably be able to address some part of the informal economy that we face today. I'm not saying that we need to become a zero informal economy, because some part of informal economy is required, but a good part of that could get addressed, and that will have an impact on the revenue base also going forward.
Thank you. Thank you. Coming back to our Manish sir. Sir, we all know that talking about entrepreneurial ecosystem and perhaps the current state of affairs of the startups. The pandemic time startups would have had a curveball at them, and we really don't know how many of them would have stayed put, because even when established companies and MSMEs are finding it difficult, the startups would have had the curveball at them in the very initial stage itself, and that would have possibly bothered other startups also to venture out. How are this particular startup system seen these? Their lot changed during the pandemic times, and since you have also started many companies, and how do you see the entrepreneurial ecosystem getting developed going forward, especially with looking at the startup, because as we all know that they require a lot of job givers, not just people queuing up for a job, be it at B schools or at engineering colleges. From that angle.
I mean, if you're in the digital economy, COVID has been the biggest gift you could have got, right? I think the digital acceleration in education, in remote services, in shopping, in almost every aspect in medicine, I think it has brought forward the digital revolution by 20 years. So I have no doubt in my mind that IT employment will go from 5 million to 10 million in the next few years, because India has the same switching costs in software that China has in manufacturing. I mean, Bangalore is the only city in the world where you can get off a plane and hire 1,000 Hadoop programmers in 1 week. We did that for one of our clients recently. So I would submit that IT employment, because TCS, Infosys, Wipro, and the Indian software majors, but even now the 1,600 captive centers. Mercedes-Benz India is not a car company, it's a software company. It has more people writing software. Robert Bosch India has four times more people writing software than building spark plugs for Myco. So I would submit that the digital revolution on the software services side is substantial. On the startup side, the funding revolution is absolutely unprecedented. We raised $10 billion in private equity from January to July this year. We raised $10 billion just in July. So now there has been, so this kind of funding was not available, forget my father's generation, even my generation. So I think that there is a unique confluence of China fatigue. There is a confluence of global fixed income becoming no income. There is a global shift of economic gravity to Asia, which really creates a window for Indian entrepreneurs and India as a whole, right? We have a lot of covering up to do. I mean, when I landed in 1994 for my MBA in business school in the US, I went to Wharton. There was a front page article in the Wall Street Journal which said that India is more interesting than important. I hope that journalist is eating the newspaper on which she wrote that, because what's happening in India is not once in a decade or once in a millennium. It's really once in the lifetime of a country. For first generation entrepreneurs like us, I spent a few years of my career in the pre-licensed Raj era. right? In pre-1991, entrepreneurs spent 15 days out of your month in Delhi, Shastri Bhavan, Yojana Bhavan, BGTD, CCI, all the alphabet soup which kept India poor. You didn't have marketing, you had distribution. You did not have HR, you had admin. You did not have treasury, you had accounting. I mean, you didn't have clients, you had hostages, right? I think that the post 1991 was an important shift, but what we hadn't fixed was education, formalization, banking. I think that the last few years we have taken on formalization, which is short-term pain for long-term gain. I think there has been a greater devolution to states now. I think that 29 chief ministers have much more money than they have ever had in independent India. Indira Gandhi in 15 of her speeches had said strong states lead to a weak nation. I think N.T. Ramarao responded to her saying that the central government is a conceptual myth. Everything that matters to people is done by state governments. Actually, COVID reinforced that, right? In COVID, you were looking to state governments for your daily life in this. So I would submit that startups, to be a startup entrepreneur in India is like nothing any startup entrepreneur before this has faced. We have role models, we have financial ecosystems, we have alumni of software companies and successful entrepreneurs. The universe isn't made of atoms, it is made of stories. As a poet used to say, that Maya Angelou. And I think so. So I would submit, contrary to the belief, and obviously I'm distinguishing between MSMEs and startups, which you did yourself, so I didn't do it. Startups are people who think about their companies not as a jagir, but as an amanat. You're only, it's not yours. You own a part of the equity, but all the people who come and join you, all the investors who come are adding value as much as you are, right? I think that is the fundamental difference between a startup entrepreneur and an MSME entrepreneur, is that you are just one part actor in building the institution. So for a person who thinks like that, I think COVID has not been fatal, but it actually has been an accelerator.
Thank you for clarifying on that. Yeah, now going back to ma'am on, what the, as Fiki, what is that? Is there any specific kind of programs that you work, especially for the women entrepreneurs?
So that's a very interesting question, because you know that FICCI has a FICCI Ladies Organization for last, I think, more than 3.5 decades now, which was really established for the promotion of the women entrepreneurship. That does a lot of capacity building programs and B2Bs, etc. But 2 years back, when we had the third women president of FICCI, which is Dr. Sangeeta Reddy, and so she started an initiative called Greater 50%, and so while women may not be more than 50% in terms of the population, but the impact that can be made by women could be greater 50%. And this is a joint property between FICCI and FICCI Ladies Organization. And one of the verticals in that we are looking at is the mentorship program, with the whole idea that one successful woman can actually handhold one successful woman, so another woman who aspires to be an entrepreneur or kind of exploit her her willingness to do something. So that can really become a whole chain of creating the aspirational women achieving certain goals in their life. So we've been working, on the mentorship program. We have tied up with an organization called Micro Mentor. It's a US-based startup again. So they have an online mentorship platform wherein you can actually bring in the mentors who think they have, and this is not necessarily restricted to mentors, are not necessarily restricted to being women alone. So they can be men as well who have expertise in certain area, and they feel that they would like to impart their knowledge to some other person who's aspirational to kind of do something in life. So then this platform auto connects, the two sides, and we have a lot of them registered from India and abroad, who are availing benefit of this. And it also has the this thing of providing the feedback mechanism, whether you're satisfied or more information is required. So this we've been running pretty successfully for last 2 years. We also have been doing a very successful program for women on corporate boards. So basically give the opportunity to some of the women aspiring to be on boards with the right kind of skills that is required. When the whole the policy came out, there was a lot of issue around the lack of availability of the right women resources. But I think we've proven that wrong, and there are a lot of resources which just require a little kind of, just honing of the skills, and they're all ready to be on the board. And also on the entrepreneurship, we are we've been doing through our bike platform, which I talked about earlier, a lot of B2B meetings for the women entrepreneurs as well. So we at FICCI also hold the BRICS secretariat, the secretariat for the BRICS, which is the regional bloc. And we recently completed, there was a exhibition that we did, a virtual exhibition, where the women entrepreneurs from all the 5 countries had participated to really be able to exchange, the work that they are doing, and if there is any potential market in each other countries, or any possible collaborations that may be required, or any learnings that may be there, for these women entrepreneurs. So these are some of the stuff, some of the stuff that we are doing with mid-size as well as the grassroots women. There are a lot of grassroots women which have been identified who have very tiny businesses. And so we have done surveys to really understand what is the intervention that is required for them to be able to have sustainable businesses. And now with the help of either the state government or with the private support, we are trying to create those interventions to help these women have, sustainable businesses at their end. And with the likes of Mandeshi and some of the banks, we are trying to do digital literacy programs and financial literacy programs for these women. Like, your director said that this is something which is very important for the micro. We are doing this for the women entrepreneurs so that, they can on their own steam be able to kind of manage their business as well, and don't have to depend a lot on other resources. So that's the kind of stuff we're doing in women entrepreneurship ecosystem.
Just an add-on question to that. I mean, we all know that talking about women entrepreneurship. It's also true that during the pandemic time, many women entrepreneurs could not sustain, and the closures were more. Possibly, the kind of ecosystem and the closures and all, especially in the food chains and such other things, wherein there are more units are present, did not allow them to work and contribute, and that had given, especially the small kind of micro enterprises manned by women, had to face a very, very bad situation. And I don't know whether many of them would have even exited in such circumstances. So is there any kind of programs which FICCI has done for their lot also to bring them back, or some such interventions where it was really felt needed?
So we have done a study along with UN Women to actually understand the pain which the women-led enterprises or the women enterprises, went through during the COVID period. We have tried to understand all the pain points, that they faced, and the closure that has happened of many of the micro units. So again, this information is being used to, understand those issues, try and figure out any interventions that may be required to take care of, or to be able to bring them back into the businesses. And that project is an ongoing one. And of course, we will require huge amount of help from the banks for the formal credit support.
Okay. Thank you for clarifying that. Coming back to Manish sir, sir, this is on the since you are also the person in the skill side of things, and also on the kind of the employment scenario that when you look at in the during pandemic and going forward. What are the kind of challenges and perhaps the opportunities that you see in this? How the lives and livelihoods issues getting changed in the tier 1, 2, 3 kind of cities, plus the skill related issues, since you're also part of the skill missions and so on. What is the kind of change or challenge that we saw, and how people were our youngsters were able to adapt to it? So, any take on that?
I mean, I think there are three distinct problems, right? Matching, repair, and prepare. So matching is connecting demand to supply. Repair is sort of a mismatch between what this demand and supply needs. And prepare is obviously the pipeline of sort of fixing pipeline. Now, all of them, repair, matching is obviously the lowest hanging fruit. You know, a kid in Durgapur wants a job in Calcutta or in Bangalore. Technically, Naukri should be able to solve that problem, but it hasn't happened. And then, the first Nobel Prize in economics went to Peter Diamond for his work on search costs and labor markets. But last year, a few years ago, it was refined, where it went to Ashley and Roth, who basically said equity markets clear on price, but labor markets clear on information. And I think that's an important insight which has been holding back our labor market matching. We just putting resumes together is not leading to better matching. So I think there are a number of promising technologies being accelerated by COVID. Artificial intelligence and machine learning are just broad terms, but I think the application of technology to job matching is going to accelerate, and I think that will really help in the next few years. I think the mass adoption of online learning, which was being resisted, will make a difference in the upgrade segment. It's not always good for repair and prepare. At least for young kids in schools, online schooling has not been as effective as we had thought it would. So I think the randomized control trial that COVID has offered has also brought some realism into the digitization of these various processes. So I think apprenticeships have been reinforced as India only has 5 lakh apprentices. Germany has 2.7% of its labor force in apprentices. If we had that number, we should have 15 million apprentices, but we only have 5 lakhs. So I think learning while learning by doing, learning with qualification modularity, learning with multimodal delivery, and learning with signal and value are, at least for me, the 5 design principles that have been reinforced by the crisis of COVID. And if you think of that, we should have degree apprenticeships, which is really what I think synthesize this. So I think there is some regulatory cholesterol. Obviously, UGC and AICTE have tried to keep the education and skill systems completely partitioned. I don't think that's a good idea. There should be a continuum. And so I think that the new education policy is really got a 15-year implementation roadmap. I think COVID should force us to bring that down to a 5-year roadmap. And we will really then stop distinguishing as much between education, employment, and employability. Because without employability, education is useless. Without employability, employment becomes difficult. And employment without employability and education is low productivity employment. So at its heart, the productivity question of human capital, 66 million Britishers produce the same GDP as 1.3 billion Indians today. And they're not smarter than us. Their culture is not more conducive. They are just more productive than us from various aspects, their sectors, their firms, their individuals, and their sort of regions. So I would say that from a skill development perspective, breaking down the partition with the education system, which is a regulatory cholesterol initiative, I think raising apprenticeships, because learning while learning and learning by doing, employed learners will have to cross full-time learners in India for us to make education justice much more pervasive. In a poor country, if you can't do learning while learning, you will always advantage kids with an opening balance, or kids who sort of chose their parents or their PIN code wisely. That's not always possible, so we have to be careful with that. So I would submit that COVID, everything we need is in NEP. Let's just accelerate its implementation from 15 years to 5 years, and then we'll be fine.
Okay. Thank you for clarifying on that. And ma'am, to you, we were discussing regarding fintech and how they can do the financialization or contribute in that. I see a question in the chat box, which I am trying to direct to Jyoti ma'am. Do you see future of traditional banks under the current rapid disruption being brought in by fintechs in collaboration with giants like Google, Amazon, WhatsApp, Facebook, etc.?
I think this is the debate which is happening at the global level. A lot at the regulatory level really to sort out, and we are seeing what's really happening in China. So fintech does have its own advantages. They are very smart and nimble, and they have great ideas out there, and they're able to really use the information in a much smarter way than the traditional banks have really been used. But answer really lies in bringing the two together. So while I think the traditional banking definitely has its advantages, the fintech brings in a lot of nimbleness into the process. So I think if the two really work together, and that works to the advantage of the customers and the NBFCs, of course, many of the fintechs are NBFCs only, So the advantage that they have is that they do have understanding of the ground level issues, and then if you're able to do the right kind of data mining by able to get the right kind of data points and use them, and then use the traditional products of the banking system, and if the three could be really married together, I think that really becomes advantageous to the customer, and that is what going forward is going to be the real answer to it. Of course, we have the Googles and the Facebooks also entering into the lending business, but the whole foundation will always remain the banks. It's the outreach of these institutions which can be very well utilized by the traditional banking system. So we can't really now, the stage that we have come to, we can't really have the two work in isolation. I think the best thing is to get the two together. And fintechs have really created a revolution in the country. There's huge amount of experimentation and a lot of startups which are emerging out here. And I think government has also been fairly supportive in terms of providing the right kind of environment. But there are certain issues which RBI is taking care of as well. So it's going to be, the two need to really coexist and then co-survive and really be together. And some of the aspects which may become challenges, I'm sure the government and the regulator will take its own course, in terms of taking the right paths, which is best for the economy out there. But yeah, partnerships is the word really.
Thank you, ma'am. Just to add on, or rather to magnify the question the gentleman Muhammad Umar has asked in the chat box, from the progressive point of view of MSME, since you represent the federation, what is that they look for from the banker side? What is the ask beyond, obviously, the further moratoriums or, replacement? I'm going to the substantive part of it.
Yeah.
What is the ask?
Everything that Mr. Sabharwal doesn't believe in is what they ask for. So there are, when you talk to MSMEs, yeah, they are into their day-to-day businesses. They really don't have time to think macro, and this is very unlike the current generation startups, which obviously can be bucketed in a way into the MSME, because they start with an idea, but they have a certain kind of capital which is available to them, which is, I think, is the traditional MSME is deprived of. I think the traditional manufacturing, or even the basic services which are being provided by MSMEs, they are struggling for their day-to-day affairs, and what is required is the working capital, whether it is the formula of the working capital which requires any change, whether it is the issue of personal guarantee, which is a big issue with them, because personal guarantee is sought for by the banks for every debt that they have to take. So can we limit those personal guarantees to a certain number and not take take personal guarantee beyond, a certain amount of loan, and if the working capital, if we can have it to about 15 to 20% rather than up to 30%, like you have it currently, or even the inventory, when you calculate the drawing power ratio, whether how the inventory has to be really taken care of while calculating their drawing power, etc. So they have these very minor issues which might appear to be minor, but these are the ones which impact the working capital. And I think their eyes are constantly on that cash flow, on that working capital, because at the end of the day, they really need to keep themselves alive by looking at the liquidity of their enterprise with the end of the month, and be able to give the wages away and yet be able to survive. So I think it's day-to-day survival for the kind of units that we are talking about. Honestly, I mean, this is very unlike the current generation of the startup ecosystem.
I know. Understood. Yeah. So, I mean, since we are running out of time, perhaps the last question to you, ma'am, and then I'll come to Manish, sir. What are the two major infirmities you want to address to revive these MSMEs? And if you have anything connected in that, the role for bankers, please highlight that as well, so that the people who 100 plus, and we are also live streaming it in YouTube of SBI, so they'll all be watching it. Yeah.
So I think I'll pick from Mr. Sabharwal only the regulatory cholesterol word that he used, so-called ease of doing business, to be ease of doing business, or the Inspector Raj. The fear of Inspector Raj continues to be there with the smaller units. I think if we can eliminate that fear, it's going to be it can really help them bloom as entrepreneurs. So that's one. And of course, I think the bigger one, which is not just for MSME, but as an economy as a whole, is also about a lot on cost of doing business. So cost and competitiveness, I think that's what can keep them alive. But if I can just add another one, the information asymmetry, which is there for the MSMEs. I think that information asymmetry really needs to be addressed, and for the financial system, for the traditional banking system to be really able to understand their model and keep innovating like you did the 59 minutes. If we can keep innovating to really take care of the needs of the MSMEs, I think the two can really then work well.
Thank you. And coming to Manish, sir, beyond just plumbing around the issue of MSMEs, if you were to point out two major infirmities which will take India to greater heights, including the simultaneous equation of the job aspects, productivity aspects, and so on and so forth, whatever you can bring in that as variables. The two major infirmities in MSMEs which you want to address to remain competitive, survive, and sustain.
I mean, I think it would be decentralization. India can't be run from Delhi. So 29 chief ministers matter more than one prime minister, but 100 mayors matter more than 29 chief ministers, because MSMEs or entrepreneurs, or just like all politics is local, all entrepreneurship issues are local, right? So I would submit that China's genius wasn't some Ayatollah in Beijing issuing fatwas. It was 200 mayors competing for investment. And that's what really led to the biodiversity and the statistically independent tribes which created, or which really moved 600 million people from farm to non-farm employment. So the infirmity of India is 42% of our labor force in agriculture only generates 15% of GDP. The only way to help farmers is to have less farmers. The only way to help less farmers is to do more formal non-farm employment. And the only way I think to do that is to decentralize funds, functions, and functionaries from Delhi to state capitals and to cities. The obvious only sustainable competitive advantage for a country in the modern economy is human capital. So repair, prepare, fixing our government schools. If there's one number that I'm embarrassed about India, it is only 45% of kids are left in government schools. Only 5% of kids are in private schools in Japan, only 10% in England, and only 15% in the US. So we seem to have given up on government schools. But if anything should be free and at quality in a country, it should be school education. So I would say those are, we have to think about how to fix government schools, because we shouldn't give up on them. And I think we should decentralize power from Delhi to take it closer to where the rubber meets the road, where the action is. In 1924, Jawaharlal Nehru was the mayor of Allahabad, Vallabhbhai Patel was the mayor of Ahmedabad, Chitranjan Das was the mayor of Patna, Calcutta, and Rajendra Prasad was the mayor of Patna. And I have two letters of Jawaharlal Nehru talking about street lights. I have two letters of Vallabhbhai Patel talking about about teacher absenteeism. So I think the rubber meets the road is where we need to give funds, functions, and functionaries, because Indians are quite entrepreneurial. I think MSMEs get a bad name because of the regulatory cholesterol, and when you're closer to the situation, I think India will be sort of unleashed in ways that are hard to imagine. So decentralization and human capital.
Thank you. Thank you to both the panelists. We are closing right on time at 5:30. We started at 3:30. And to all the participants who are tuned in, and also to our esteemed panelists for all the questions they've answered. And so nice of you, Manish sir and ma'am, to have come forward on behalf of the State Bank Institute of Leadership. A big thank you to all of you, and also to our esteemed panelists.